Hey everyone, this is Ryan Mallory for SharePlanner.com. So I'm going to try and do these videos, excuse me, once a week. I've been sort of torn in the past about how often to do them. Sometimes I'll go like 2-3 weeks without doing them, and then I'll say, you know what, I'm going to do them every day, and then I don't do them every day, and then so I'm going to try and hit a happy medium between doing it every month or two and doing it every day, and trying to do it like once a week. All right. I figure that's pretty doable. I can achieve that because honestly, goodness, sometimes the videos can be a real pain for me to put together. Not because in today's with today's technology that it's difficult. I just make it difficult for some reason. I forget to turn on the microphone. The last 2 times I've done videos, I forget to turn on my microphone. So I'm basically just doing a monologue to myself, and that's no good. We the charts aren't very good without any like sound or words to them. So that can create a little bit of frustration and tension, I guess, with myself because I got nobody else to blame for it. So yeah, once a week, maybe like Thursdays, Fridays, probably more likely on Thursdays. Fridays, a lot of people sort of tune out of the markets on those days for reasons unbeknownst to me, but generally speaking, I have noticed that to be a trend in past years. So got a frog in my throat that I'm trying to get out while I'm doing this. So until yesterday, we were up 9 out of 10 straight days. Yesterday, we actually pulled back, and the action really was extremely mundane. There was the Bears. Some people might say, "Oh, the Bears had control." They hardly had control because if you look at this here in the upper left-hand corner, we sold off pretty good, and then we just sort of marched steadily back higher, and we wiped out about half the day's losses. So that shows you that the dip buying's in at the highs of this market. Very good sign for the bulls. Like I've said in a lot of my trading plans, there's no concerns with Syria at this particular moment. There's no debt ceiling issues. There's no debt ceiling government shutdown possibilities, at least not for the next few months, okay? And that's a big deal. Now, what January and February holds, I don't know, okay? And I don't really care because I'm in October right now, and so my time frame is what is October giving us, okay? And October is giving us a lot of clear skies because the market, in order to sell off in today's day and age, it needs a pipeline of bad news. Not just one bad news where employment misses for one day, okay? It needs a pipeline of bad news. That means, you know, Janet Yellen's coming out there saying, when I take over Fed chairman, and she's saying this like every day, I'm going to taper, I'm going to raise rates or something like that. That will get the market selling off fast and in a hurry, okay? Syria starts, you know, we start talking red line, purple line, green line, and not upholding it, or we do hold it, whatever. That's going to create some market problems, okay? But it needs a pipeline. It needs a steady flow. We got that like in this, I think it was 2011 summer, where the markets were dropping sometimes like 800 points on the Dow a day, or at least one time it did, and then the other times it was like 300-400 points. But it looked like close to a repeat of what was going on in 2008, except it stopped short and then bounced back higher. So the pipeline of bad news is ultimately necessary. And in the last time I did a video, I did talk about this, so I'm not going to go into in-depth, but if you look at like the August-September lows, how hard we bounced, and then you look at the June-July lows and look how hard we bounced from there. When we formed this little couple of candles here, this is when I started getting extremely bullish back on this market again, because I was shorting here, and then I've been going long here. And the only reason why I did it is because we had a recent precedent for assuming that this market was just going to keep on taking off. And in between there, you might rise like 5-6 days in a row and then have a little sell-off and then continue up for another leg. Here in July, we had it where we sold off, 2 out of 3 days, in a very minor way, and then we took off again. So this here, I would expect us to maybe push 1770, 1780, maybe even make a run for 1800. I don't know. I doubt 1800. However, I would say, though, that this might be like the second half of this leg that started back in early October. And just to see how far that'll take us, because this is a good time to be long right now. And then, November, December, we'll see what that... I think there's still a lot of bullishness left in this market. Perhaps this is like a huge breakout moment for the markets to where we do go beyond 1800. But there's not a lot of bad news, and until we start seeing a pipeline of bad news, there's no reason to really get bearish on this market. All right. As it stands right now in the portfolio, we got like one, two. I actually got out of my last short position today, AXL. Um, the chart still looks pretty good and everything, but I mean, in order to short the market and consistently profit at it, you need a bearish market. If you're not going to have a bearish market, then there's no real reason to be, adding a lot of shorts. Now, when I saw that the SPX was rising like 9 out of 10 days, I knew that we were getting ready to, get at least one down day. So I was while we were getting like, on this day here, dadgummit, I swear. All right, did you hear that? That was the lawn man, and I'm not editing it out because I'll probably destroy the whole video if I edited it out. But I swear, every time I do one of these videos, the daggum lawn people come, and they don't. It's never the same day. It's always a different day. Well, maybe it was last Thursday too, but still, how can they possibly know every time I do one of these videos, they're gonna come by and start weed whacking right in front of my office or driving their lawnmower? Dadgummit. All right. And they're going to come back around a few more times. It drives me nuts. They're not, cutting my grass every day, but I mean, it sure does feel like it every time I do one of these videos. So I got out of the S&P 500, I'm sorry, now I've lost my train of thought. I got out of a couple of my positions here, and started curbing it down. I think I had about 30% long, 20% short, coming into yesterday, and then I got rid of one of my shorts, which was HTZ. You can see today it's popping, but when it bounced off that 200-day moving average yesterday, despite the market being up, I did benefit from this candle here. So I didn't want to give back all my gains, and if I had held today, of course that would have been the case. So I got out with like a 1.1% gain, which ain't bad. I mean, heck, I'm benefiting from a stock going down, right? And then AXL today, I held this one for a little bit longer, but when we finally got that sell-off, I got out at about 1886, I think is what it was, 1887. So that was about another 1.1% return. So I'm not really trying to hit home runs with these shorts, and I'm really just trying to capture a profit there. So for me, 1.1%, I like anything that's got a positive light to it for me. So if it's 0.5%, 10%, whatever, I'm always thrilled to take the profit. It's more money than I had before, right? So that's really what you're doing with trading. You're trying to make more money at the end of the day than what you had from the day before. Sometimes that doesn't always work, but that's the ultimate goal, right, in trading, keeping it simple, guys. And then like NWE, this is when we got back on 1017. So that was, I guess that was like last week sometime, but essentially what I saw in this one was a nice little support level here, and I was a little bit hesitant to get into it, but I mean, since then we had this huge day here, and that was great, and then it's just been marching steadily higher since then. So this was the day that we got in. It looked like it had held that support level, and once it did, man, it just really took off. And I'll probably raise my stop loss in this stock to probably 71.88 or so. So gives me a couple of bucks to work with here while it figures out how high it really wants to go. And I've locked in some profits in the process. And LYV, this is another stock. We've had this one since 1014. So going over, my thought process on this one. You had a nice little push to new highs, and then it bull flagged here, and then I got in when it was started to break back out of this bull flag here, and since then it pulled back. It's gone higher and then pulled back a little bit, but right now it looks really healthy, and I think I'm probably due to tighten the stop loss some in this one as well, probably too. Right now it's at 1906. So yeah, we'll have to figure that out here, but it got close to actually stopping out today, but we'll see how the day ends. We might just keep it there. In any case, that's just a couple of the stocks that I own right now in my portfolio. And if you want to subscribe, SharePlanner.com backslash splash zone. Let me say that again. SharePlanner, www.shareplanner.com / splash zone. Okay, and that'll get you to the our trading room. Doing great. Oscar also on Fuel has also known as Few and Has on Twitter. He's doing a great job with the day trades. Couple of quick stocks. Let's look at them. Apple. People like to talk about Apple, so I guess I'll talk about Apple here. I think I've been talking about this one on my companion website, stockingapple.com, where I provide a lot of individual stock analysis. I said this thing had 542 in its crosshairs, and it looks like it's probably going to get there. It's at 530 right now. I said, you know, if it can cross through this 510 barrier, that the stock would have no problem hitting that 542. I think it'll probably hit it before earnings. We'll see if I'm right on that or not. But very close to doing so. And then after that, it's got, you know, this is going to depend largely on how earnings does. But if earnings are pretty good, I could see this thing easily going to 585. If the earnings are bad on Apple, definitely like 480 is a strong possibility. That's one support level. I mean, earnings things can slice through support levels with little to no problem at all. So what you don't want to see earnings, you don't want to see the stock go below, you know, the 460s for earnings. That would be a horrific earnings report for Apple. I mean, excess of plus 10% into the downside. You don't want that. So keep those barriers in mind. You definitely don't want to cross any of them to the downside, but if so, you know your support levels. And then, you know, don't get too greedy on the upside either. I think there's a lot of opportunities still left in Apple. I'm not hugely crazy about the product line, but they are sitting on hordes of cash, and they have that cult following still going for them. Google. GOOG. Pushing nicely here. You know, you don't see too many stocks cross that $1,000 barrier, but, you know, a lot of people are making a lot of excitement about it, but, you know, your share price and your market cap has a lot to do with how many shares are outstanding and everything. So, I mean, if Apple right now wanted to, you know, do a reverse split of 2-to-1, they'd be over $1,000 too, and there's no stopping them from doing that. So, don't get too enraptured. It's sort of cool, but don't get enraptured with the, oh my gosh, Google's over $1,000. But if you're long it right now, okay, if you're long, and I did this on stockinggoogle.com yesterday. Put your stop loss below 995. So just do like 995 or 994.99 or just something like that, and see how far this thing will ride for you. And who knows? I mean, this stock might still have a lot left in the tank. It did an incredible job of negating this head and shoulders pattern that was forming. So that's a huge move for Google. You know, destroying a bearish pattern like that and breaking out the way it did. And let's do one more chart. How about Facebook, huh? I get a lot of questions because a lot of people bought it back in the teens, and it's just been moving higher since then. So if you can, the best way to do this, I would probably use I just probably follow this 20-day moving average as a trailing stop. If it crosses below that and closes below it, get out. It did it here back on 10-9, and if it happens, it happens. Just get out. I mean, eventually this thing's going to have a pullback, okay? It's inevitable in all stocks. But the only thing you don't want to do is you don't want to lose your profits. If the stock runs after you get out of it, who cares, okay? It's one trade. You just move on to the next trade. That's what trading's about. Stocks are going to go up and stocks are going to go down when you get out of them, okay? And you have no control over that, and to try to personalize it is a dumb thing to do. So before the weed whacker comes by my window and starts, you know, really messing things up again for me, I'm going to get out of here. So thank you all. God bless. And if you have any questions, hit me up at ryan@shareplanner.com, and consider giving us a free shot at the 7-day trial of the SharePlanner Splash Zone. SharePlanner.com /splash zone. Take care now.